Here we go. Okay. I am ready when you are.
You can start right now.
Okay. I am calling to order the Finance and Administration Committee meeting and Board of Directors meeting of the Marin Municipal Board of Directors for February 25th, 2020. The first item of business is the roll call.
Director Bragman.
Here.
Director Gibson.
Aye.
Director Russell.
Aye.
Director Schmidt. And Chair Gibson.
Actually, it's Chair
Or
Kohler.
Kohler, sorry, Chair Kohler.
Okay.
Sorry.
I'm still here.
I was looking at Director Gibson, sorry.
We forgot to tell you, Cynthia. Sorry.
Yeah, there's been a coup.
Yeah, sorry.
Okay, I'm now looking for a motion to adopt the agenda.
Move
So
approval
moved.
of the agenda.
Second.
Director Bragman.
Aye.
Director Gibson.
Aye.
Director Russell.
Aye.
Director Schmidt.
Aye.
And Chair Kohler.
Aye. Is there any is there any comment from any member of the public on any item that is not on the agenda?
Looking at the attendees list, I do not see any raised hands, so no.
Okay. That brings us to our regular calendar. I need a motion to approve the minutes of the last meeting, which was in December.
Move approval of the December minutes.
Second.
I'm sorry. Did you say December minutes or January minutes?
Oh, I'm sorry. I was looking at something else. It's January 28th.
I'm sorry, yeah. I'll move
Okay.
approval of those two.
Okay,
Second.
and Director Bragman. Okay,
Yeah,
perfect.
thank
Director Bragman.
Aye.
Director Gibson.
Aye.
Director Russell.
Aye.
Director Schmidt.
Aye.
And Chair Kohler.
Aye.
Thank
Our
you.
next item is the comprehensive annual financial report and the auditor's memorandum on internal control and required communications for the fiscal year that ended June 30th, 2020. This is an information item only.
Yes,
Great.
and I'd like to introduce David Alvey. He's a partner with Mays and Associates, who's our independent auditors and conducted the annual audit and the two reports that you referred to. So, David, I'll let you take it away.
Great, thank you. And thank you for having me, members of this committee. My name is David Alvey, and I'm the audit partner with Mays and Associates, and I am the district's independent external auditor. And my role every year is to come in and audit the financials and give an opinion and to state that the financials are either or not, whether or not they are free from material misstatement. And I just want to go through just a really quick high level of the audit process itself. The CAFR, the Comprehensive Annual Financial Report for June 30, 2020 you have in front of you, is required not only by the government code, but also by your bonded debt and other regulatory agencies required as well. And the role of an independent CPA to come in and review that is just to give assurance that the financials that you're looking at, the financials that the public are looking at, are free from material misstatement. And the process starts with an interim phase. And we did this back in the summer, where we come in and we look at the district's internal control environment. And we're doing sampling testing. So we're looking at checks being paid, we're looking at payroll, pay rates, we're looking at cash receipts to make sure that there's internal controls around all of those collections and payments. And so once we get an understanding of how the environment is, that dictates our tests when we come out after the books are closed and how much we really need to dig into those numbers to get comfort that they're free from material misstatement. And when we come out and do our testing of the balances, that's when we're looking at the cash in your bank, your capital assets, debt, pension, other post-employment benefits. And then we help finalize the report and issue the CAFR, the Comprehensive Annual Financial Report. So on page 2 of the, actually page 1 of the CAFR itself is my audit opinion. And I'm pleased to say that it is an unmodified or clean audit opinion. So congratulations, you passed your audit. And that's the highest level of assurance that a CPA firm can give an entity. So Congratulations. The second report that we have for you is called the Memorandum on Internal Controls. And this is also known as the management letter. And this is the communication from my firm to the district about things that we found during the audit. And they can be categorized in 3 different ways. The first is material weakness, that something material can flow through the internal controls and not get caught. We have none of those. The second is significant deficiency, that something significant can flow through the internal controls and not get caught. We have none of those. And the last is just other matters. And so we have a list of upcoming government accounting standards board pronouncements that are becoming down the road in the next couple years, and give you just a short overview of those pronouncements and how they're going to affect the district. But overall, the audit went very well, and the fact that you have no internal control findings that we need to bring to your attention during a shelter-in-place environment is very good. I, from a theory standpoint, from an audit, we constantly have to be changing our audit plan as new information arises and the environment changes. And with the shelter in place, that environment changed quite a bit. And when we did our audit planning for the year back in February, I would not have guessed that it would have turned out the way it did. But the fact that you guys were able to adapt and to still have strong internal controls is a true testament to your finance department and your team. And with that, I'd like to thank Mick Young for all of her help in the audit and open up to any questions you might have.
Great. Thank you so much. That was really comprehensive and helpful, and I'm delighted to know that we did so well. So thanks for your work, but congratulations to the staff. You know, it's really important that we do well with those reports. Let me start with, do we have any board comments on this item?
I have a question. Normally, and I can't say that it did not happen this year, but I don't remember it. Each board member would get an individual letter asking if there's any information we have, anything we know that should be shared with the auditors and that sort of thing. Was that sort of letter sent out? Again, I don't recall if I got one or not.
We had discussion with the chair and the general manager, and then Mick Young, I believe.
Okay.
We typically don't send it to all members.
Okay.
Any other board questions, comments, huzzahs? Okay, any public comments on this item? Terry? It sounds like there's no public comment on this item. So
I
that,
don't see any.
okay, great. So I will thank the auditor for their help on this, and we'll move on to item 3, which is the monthly financial update.
Good morning, Chairman Kohler and members of the Finance Committee. Can you see my screen?
Good.
Okay, great. So this will be a review of the year-to-date through January for the district's finances. So as always, we'll start out with our revenues. And for revenues, we are slightly ahead. If you look at the top of the slide here, you'll see that if we were on a straight line projection, we'd be at 58.3% in revenues and expenditures for the year. Obviously, things don't track in a linear fashion like that, but that just gives you kind of a measurement. So you can see that water revenues were 66.6% at $54.9 million through January 31st. As we started showing you in recent months, we kind of break down those water revenues into its 3 components here. And you can see that when you adjust for seasonality, you look at water sales there, you can see their actuals are $40.7 million, and we're about 5% ahead. So whereas we, here when we look at water revenues overall, we look at it as if we're at 66.6% or, 8% ahead of that linear track. When you adjust it for seasonality, we're about 5% ahead. And then service charges are at 104%. Those have dropped down a little bit last month when we showed you this breakout there at 105%. And then watershed fees are right about on at 98%. And then our other revenues, which include things like grants and watershed and payments, interest that we receive on our portfolio, that's about 50% or $1.7 million. So total operating revenues were 66% or $56.6 million. Fire flow fees are right about the halfway mark, as we've gotten our January property tax remittance. So we've received a little over half of that. And then our capital revenues, which is primarily the capital maintenance fee, that's at $9.3 million, or at about 52.6% of budget. So at all revenues, we're about 63%, just a little bit ahead of that linear tracking there. So we always show you what our monthly water sales are, and what you see here is that blue line there, which is the current fiscal year, has been tracking well ahead of the previous fiscal year through December. November it was right about on par. December was a little bit ahead, and as we moved into January, there the line actually fell below the previous fiscal year, really for the first time this year. The only kind of explanation that we can see there, in the previous months, we've had the effects of COVID. We've had a relatively dry year, so we see some additional water sales. In January, though, we did actually have more precipitation than the previous January. So we had about 6¼ inches of rain in January, about 4½ inches in January of 2020. So there's that little bit of a difference that might account for that, but it's a very marginal decrease compared to the previous January. And then we break this down for you by the Resi codes or customer class. And you can see that the increase year to date through January 31st, the biggest increase there obviously is in single family. So, just under 10% there compared to the previous year. And then, as you would imagine, commercial and industrial is the place, and institutional are the areas where you see the largest decreases. So almost a 20% decrease there in commercial and industrial, as they've been affected by the COVID event. And then, per the board's request, we've been showing you some computations of the aging of our delinquencies. So this breaks those down. You can see as of January 31st, we had about $4.5 million total in delinquencies, compared to about $1.5 million the previous January. And then you can see how those break out by categories. So those that are up to 30 days, $1.5 million, pretty large increase over last year. It's about doubled. And then you can see, 60 days and 90 days, that trend continues as those people migrate from one aging bucket into the next. And then we break down the 60-day past due. So that category there, that's 691,000 in the 60-day category. We break that down here to kind of look at how that's affecting different customer classes. So you can see single family residency market increase there from 309,000 last January to almost 600,000 this January, about doubling. And those duplex multi-unit are up very markedly, as is business and institutional irrigation. So in every category there, really, we've got a pretty large increase in the dollars that are past due in that 60-day bucket. And you can see that's gone from $331,000 last January up to $691,000 in this past January. And then we show you the tier consumption. Really, not much has changed here. You can see for the current fiscal year that we're well above previous highs, but the composition of those tiers 1, 2, 3, and 4 remains about the same, with about 75 to 80% of the water consumption being in tier 1, tier 2. And then we have AMI data. Again, at the request of the board, we've started providing this in the past several months. And this is 1,180 meters. These are all single family Resi codes or customer class here for the area of Tiburon and Belvedere. So you can see where, we're tracking on that orange line there throughout the fiscal year, almost all of the fiscal year until you get into November. We're tracking well ahead of the previous fiscal year. The one kind of anomaly in the data here compared to what I showed you previously, where we've got some decreased water consumption in January. When we look at this one area of AMI data, we actually see a pretty large increase there in CCF consumption in January. That's the green line. So that's this past January 2021 compared to the previous 2 Januaries, the orange line being January 2020 and the blue line being January 2019. Again, a little bit anomalous to what we see in the other data. And then we show you a smaller sample size of 84 meters. And this is for the entire service area. And again, you can kind of see how that data is tracking with when you look at the institutional business meters. And as we kind of showed you in a previous slide there, as you would expect, the AMI data bears out what we see in those previous slides, where we're seeing a decrease in usage by the institutional business meters until you get to January there, and then you see it's about the same as if you go back to January 19 and 20. So unlike the previous slide where we kind of had that little bit of a spike in January looking at residential meters, we look at business, we kind of follow our trend line. And in January 2021, that green line there on the left, we actually fall down compared to the previous years, as we would expect. So turning to the personnel, to the expenditure side here, the first place that we look is the cost of personnel services. And again, that one, if you're looking at a linear trend, you know, we're 58.3% through the year. We're 59.3% at 1% ahead on personnel services. For practical purposes, we're pretty much dead on there. Maintenance and operating expenses are ahead of that linear track a little bit by 64.2%. And if you look in the attachments, I think it's attachment 3 in your package there, you can kind of see some of the areas that are a little bit higher, one of those being electricity. I think we purchased more water this year. So those expenses are bumping up that maintenance and operating expense a little bit. So it's a little bit ahead of that linear tracking. Financing costs are dead on because we just take that and accrue that throughout the year. And then capital allocation, moving that labor cost to capital right about a little bit over half of where we expect to be in the budget. So that puts total operating expenses 61.3%. We're right on there. Fire flow projects is 17.8%. And then district capital projects are 27.8%. And so that brings our total expenditures with capital down to 51.4. Again, one of the things that we kind of added to this presentation the last month or two is this slide that factors in the encumbrances. So if you include the $5.7 million in capital encumbrances there, you'll see that actually brings total expenditures up to 67.4 million or 56.4% of budget. Again, compared to that 58.3, we're about dead on there on the year. And finally, we look at ending fund balances. So the restricted and designated fund, that left column there, 1920 audited, that's as of June 30th. And then you can see where we are year to date in the right column there as of January 31st. Restricted designated fund is down about $2.5 million compared to June 30th. A lot of that's just timing of expenditures. So remember that we made a debt service payment here in December. So that brings down the restricted and designated fund. Rate stabilization reserve has not moved. That's still at $9.4 million. Fire flow fund is getting healthy at $3.5 million. Pension reserve fund has not moved. That remains at $2 million. And the capital fund is at $23.8 million. So that puts our total restricted and designated funds at $57.3 million. And then the unrestricted fund, what we kind of think of as our reserve, is at $33.7 million, up from $26.2 million as of June 30th. So one of the metrics we use is how much of that reserve that we have to budget. And you can see that we've improved from 3.7 as June 30th to 4.7 months of budget in reserves as of January 31st. And then you can see our debt service coverage there at 3.0, which is healthy. Outstanding bond debt's at $142.1 million. And as they mentioned, the capper, we've been steadily defeasing that. And then those smaller bonds that we have, like with Las Colinas, are $7.3 million. So total debt about $150 million.
Chuck, Could I
yeah.
ask a quick question on the capital fund? Is that the CMF fund that you broke out?
Yeah, it's primarily CMF. It does have some other components in there. So we've got the connection fees. I think fire fees in there too, right?
Fire flow?
Fire flow. Yeah.
Okay, but that does include, so I just, because you break it out in the next item, and I just wanted to ensure or find out the capital fund includes the CMF.
Yes, capital funds primarily CMF.
Thanks a lot.
And then we've been showing also the board the impacts of COVID-19. Again, these are impacts from the inception, so back to February, March timeframe, and we've expended $442,614. Biggest chunks of that were for deep spree of buildings and vehicles, which is about $150,000, and then we spent about $170,000 on additional sick leave under the CARES Act. So those are the excuse me, the biggest components there. So the summary, so the revenues expenditures are for the most part tracking with budget. Our fund balances remain healthy, and COVID is a minor financial impact. On the fund balances there too, on this, we just on Tuesday got notified by Fitch on an affirmation of our AA rating, and some of the things they cited in that affirmation was, our control over revenues, and that our fund balances were generally healthy. So that definitely helped with maintaining our high credit rating. So at this time, take questions if the board has them, or comments.
Great. Thank you, Chuck. That was really comprehensive. Any board comments, questions?
I had a question. It came up during the audit, but it's more of a substantive question, which I think Chuck can answer. But there was a note that our OPED costs were reduced by 8.8 million.
Yeah.
And I'm just wondering how or what accounts for that.
Yeah, that's the actuarial number, and I think a couple things drove that down. I'm trying to find the note here, but if you look at the breakdown of it, I think a portion of that was investment returns and contributions to the plan. So that drove that down by about $8 million to the good side. It reduced that liability.
Okay. Is that going to keep tracking, or is that kind of a one-time deal? Or
well, it depends on what happens in any given year. So the OPEB, it's kind of like CalPERS, and if you note in the note to the financials there, they actually give a sensitivity analysis. So I think they assume 6.75% return if memory serves, and then they give you sensitivity analysis. So if you have an increase in that or a decrease. So my long-winded answer there is it kind of depends on what happens partially in the marketplace.
yeah,
You have a good investment year or a bad investment year,
Yeah.
but there's no reason to think it, given that everything holds, that we should have that should continue to track.
okay. Thanks a lot, Chuck.
Great. Any other board comments or questions? Do we have any public comments or questions on this item, Terry?
I cannot see.
Okay, great.
Okay. I think that means we're, okay, I didn't quite get that. So no public comments or questions on this item. So we are ready to move on to item 4, which is the monthly investment report.
Yeah, and I just added a slide to the end of our financial report presentation here. Really nothing new to report. We give you an indication of how the local agency investment fund is doing, since that's primarily where we have our portfolio invested, about $75 million in that fund, which is the cap. So that's at about 4.46%. And then you can see the portfolio overall is about 4.41%. And then as usual, we give you the yield curve of the treasuries. So you can see it. 3-month treasury right now is at 5 basis points, or 0.05%. And if you go out even to the 5-year treasury right now, you're getting 0.42%. So, we are in a obviously very low interest rate environment right now. So right now, LAIF is been pretty much our best bet. And I can take questions if anyone has them on the investment portfolio.
Any board questions?
Just my monthly reminder on Jenny Mae's, much better percentage, much higher earning. And I think one of these days we should consider putting part of those funds in a higher earning account, seeing if we could grow it a little bit. That is an approved investment.
Yeah. Yeah, it is. And we're actually looking right now for places we're going to have to put invest in some other places, because as I mentioned, our LAIF portfolio is reaching the max. So we probably are going to have to look at some other options there.
Okay. Any other board comments on this item? Any public comments on this item?
There are no public comments.
Okay. That being the case, thank you, Chuck. We are now moving on to item 5, which is amendment to board policy 33 regarding investment policy. This is an action item for referral to the board for approval.
Thank you. And I will percolate this down really to its essential elements. We're essentially doing 2 pretty modest things here to the existing investment policy. One is just a change in title to finance director. And then the other, and we've mentioned this to the board before, we would prefer to mirror the state code and give the investment report quarterly instead of monthly. Our investment portfolio really is very non-dynamic, so I don't think there's any reason to really serve by reporting on monthly. So this would just allow us to bring that to the board quarterly per the state requirement. And those are the only changes that are asked for in the investment policy. And this would also refer the policy to a meeting of the board of directors for approval.
Just a point of order. I think we missed item 6, which was the report on the capital maintenance fee.
No, this is item, I don't think
This is item 5. Item 6 is next.
Yeah, item 6 is next. You've
Sorry.
got it, Larry.
Sorry.
That's okay. Yeah, so let's stick with this for a minute. I will just say that I think those sound like very reasonable and appropriate changes. I would have no problem with that. Are there any other board comments on this item? Okay, any public comments on this item?
There are no public comments on this item.
Okay, great. Then do I take it from the silence that we are agreeing to unanimously to refer this to the board for approval? This is board policy 33, the investment policy. Okay. That's what we're doing. Now we are on item 6. This is an information item, the report on the capital maintenance fee for July through the end of December 2020.
Okay, thank you. And yeah, so referring to to the staff report, we give a table there that shows the progress with the capital maintenance fee that was adopted in 2019. So in the right column there, we have fiscal year 1920. We took in $14.3 million in revenues from the CMF. I think when it was created, we had estimated that we'd get 16.5 million per year. The reason we were a little low there was because of the collection of that revenue. So it really didn't start until September of the first fiscal year that was implemented. So we fell behind a little bit from that 16.5, which was for a full year. And in that first year, in 1920, we'd spent $790,000 of that, and that was on fuel reduction. So that left us with $13.5 million left.
Chuck,
And
I'm
as
sorry,
that,
can I interrupt you just for a second? Are we supposed to be looking at something? Because I'm still looking at the yield. The screen still has the yield curve from your last presentation.
yeah, I apologize. And that we're done with.
Oh, okay. So there isn't something you want us to be looking at right now.
There's not.
Okay,
a
just the
person called.
report.
It's just the report, and I'm just
Okay,
referring to the
sorry, I was just
table in the
confused.
back of the report.
Right, thanks. Okay, I'm with the program now.
So that left $13.5 million excess that we carried forward. And at the inception of the PAYGO, or at the inception of the CMF, it was a PAYGO plan. So that's not surprising. And then we look at the current fiscal year that we're in. So since July 1st through the end of December, the first 6 months of the year, we collected $7.75 million on the CMF. And I won't go through them by line, but you can see what the expenditures are there in the table. And part of that was $362,000 that we spent on the watershed improvements. I think those were related to the Ross Reservoir slide and some damage that was done to trails around that. You also see the fuel reduction in 2021 of $101,000. So that's expenditures, but we've actually encumbered a lot more than that. If we look at the total encumbrances for the current fiscal year, we have $1.1 million that's encumbered for fuel reduction. And if the board recalls, recently we brought forth a contract for over $600,000 that was encumbered for that work. So if we take the fund balance and we remove existing encumbrances total of $5.7 million, we have about $14.1 million left in fund balance in the capital maintenance fee. At this time, if any board members have questions on that.
Any board questions on the CMF report?
Just on the expenditures, Chuck, it looks kind of light, and does that include all of the capital projects, or are some of them in operations that I'm missing? You know, I'm just wondering, like at the San Geronimo backup, things like that.
No, Director, I think one of the things, what you have to add in there is if you look at the total expenditures, and we're doing this on a cash basis, you see that $1.4 million, and you're right, that does seem kind of light. But remember, we have to factor in that additional $5.7 million that we have encumbered. So those are contracts that have been let and work that's been contracted but just not completed yet. So you really have to add that in there. So if you put that in there, you're really about $7 million in expenditures through the year.
Okay, so
expenditures plus encumbrances.
So your table there is cash out.
It's cash.
Yeah.
Yeah.
Okay.
Yes.
Okay, that makes sense.
Okay, any other board comments on the CMF item?
Thank you for.
And absolutely. Thank you. Any public comments on this item?
There are no public comments on this item.
Okay, that brings us to item 7, which is repeal of specialized board policies and district code provisions contained in the board handbook. This is a review and referral for board approval item.
It is. Thank you. Good morning, Chair Kohler and committee board members. This is really a housekeeping item. So with the adoption of the board handbook as policy, that allowed us to go back and look at some of the old board policies to do a bit of a cleanup where we had repetitive provisions or in some places slightly inconsistent provisions. And so we've identified a list of the board policies that we think are addressed now in the board handbook. And similarly, we looked at the code sections, code provisions in our the municipal district code, and located some provisions that are inconsistent. I call out particularly the regular board meetings that talks about having meetings on Wednesday. I do want to note that section 2.10.040 regarding quorum, We did review that provision specifically, and we do not want to repeal that provision because that actually mirrors water code language in section 71274. But I do want to note also that as we've researched the code sections to see whether we could repeal certain of them, we have an inconsistency in the board handbook regarding the voting requirement. So that's something that we'll need to loop back and clean up. Currently, the code is in place. We leave the code in place, and that would be controlling and consistent with state law. So with that, if there are questions, I'm happy to do my best to answer them, and we would ask to have this referred to a regular board meeting.
Great. No questions for me. Any board comments or questions on this item?
I have I guess a question. It all looks good to me. I mean, the only curious thing to me is why is this a finance committee agenda item? It seems much broader than that.
Well, thank you very much, Director Gibson. That's a very good point. And I believe that we've expanded the committee title to be Finance and Administration. And we did consider this an administrative item. So we thought it was appropriate to bring it to this committee for referral to a board meeting.
Okay, I think I missed the expansion, but yeah.
I think that was in January with the review of the committees. There were a couple of them that were combined, communication and water efficiency and finance and administration.
Okay, thank you.
Yes, of course.
And can you just kind of repeat what you said about the quorum?
Yes,
part of
I
the-
can. So our district code has a provision regarding quorum of a meeting, but it also speaks to the necessary vote requirements for passage of an item. And that says that it requires the affirmative vote of a majority of the members of the board rather than a majority of a quorum of the board. That is also mirrored in the water code section that I referenced, 71274. So we want to be consistent, obviously, with state law. We, in error, had a different provision in the board handbook. We'll need to loop back and clean that up, and we should continue to follow the code and leave that code section in place so that we are compliant with state law. Currently, the board handbook says that it's a majority of the quorum of the board.
So does the water code require the majority of the board for certain types of votes like budget and that type of thing? Or
The water code, actually, the water code does not specify. It basically says any resolution or ordinance of the board is majority of the board members.
we need three board members? Okay.
That's correct.
Okay, thank you.
You're welcome.
Okay. Any other board comments or questions on this item? Okay. Do we have any public comments on this item?
There are no public comments.
Great. Then I'm going to thank the staff for these presentations, and we are adjourned. Have a great day, everybody.
Okay, thank you all.
Thank you.
Don't we need to review and refer? Isn't this the
I thought we
review and
just did
refer
that.
item?
Yes.
This is, we
Yeah,
have
but
done that.
But didn't
Do
we
we need
need a vote or a
We don't vote.
motion?
Typically, we've had a motion in a second. I think if the board is in consensus to refer it, that we can take that as direction to staff.
Yes.
Unanimous. Okay, thank you.
Absolutely.
Thank you.
Okay. Thanks, everybody.
Thanks, everybody.
Okay, thank you all.